Hey guys, today we're going to talk about the 5 easiest mortgage products to qualify for. So if you're in the market right now to buy a home and you want to figure out, hey, you know what programs are out there that are easy to qualify for, low down payments, maybe low requirements in regards to income, I've got those 5 loans for you. Now these loans are in order. So what I'm going to do is I'm going to start with the hardest loan, and even that it's not hard to qualify for. And then we're going to go step by step until we get to the easiest, lowest documentation loan out there today. So let's get started. So today I'm going to start with conventional. Conventional is the bread and butter mortgage loan product out there. It's a Fannie Freddie product. Those guys buy all those loans. It's a really straightforward deal. 620 minimum credit score, as low as 3% down, depending on your credit score and if you're a first-time home buyer or not. But most of the conventional loan products are 5% down. There's mortgage insurance on conventional loans. And so what that means is that mortgage insurance is kind of like an insurance policy, and the insurance policy is for the lender. So if they're giving you a 95% loan to value on your mortgage loan, and you're putting 5% of your own money down, mortgage insurance would be required. Some people call it PMI. So that's just an additional fee that gets tacked onto your mortgage payment. In case you default on the mortgage, it protects the lender on a portion of the loan itself. It's like an insurance policy that Fannie and Freddie require when they're doing conventional loans. Straightforward, very normal underwriting guidelines. We use an automated underwriting system, and we plug in your details, and it spits out what your approval will look like, and then what requirements will be required in order to get your loan across the finish line into closing. So great product. Lots and lots of people use a conventional loan. It's a very clean product to use. So what happens if we don't quite fit a conventional loan? Our debt to income ratios are a little higher, or maybe our down payment requirements need to be a little different. The next easiest loan, which in my opinion is easier than conventional, would be FHA. So FHA is as little as 3.5% down. Credit score requirements go way down. You can get an FHA loan in the 500 credit score range, depending on your down payment and your specific situation. The debt to income ratios on an FHA loan go way up. So what happens is you have an automated approval system, the same thing that conventional uses, but the difference is conventional is capped at a 50% debt to income ratio. And here's what that means. If you make $1,000 a month, only 50% of your debt, which would be $500 a month, can go to your debt. I just said debt. I'm sorry, I'm repeating myself. So you can only have $500 a month in debt if you have $1,000 a month in income. That's called a 50% debt to income ratio, right? Half of your total income. On FHA, that's not true. It's whatever the underwriting approval states. So you can go to 56%. I've seen some at 57%. So it gives you more flexibility and a better ability to qualify for more mortgage products and a better house or a more expensive house and more expensive payments. So there's more flexibility in the way the underwriting guidelines work as well. So you have less stringent requirements. They're more flexible on student loans. They're more flexible on some income requirements. And so it, in my opinion, is an even easier loan product to qualify for than conventional. Now, FHA does have loan limit caps, and you need to check those in whatever county you're in. Whereas conventional, it's pretty much across the board. Whatever Fannie Mae spits out or Freddie Mac spits out, that's the conventional loan limit across the board as well. So they both have caps on the actual loan amount that you can get. Now, you've applied for conventional, you've applied for FHA, and neither one of those are working. So now what? So the next best program, in my opinion, is the 1099 only product. Now, this is for self-employed borrowers. So you're self-employed, you get 1099s for your self-employed income. That means you don't have any taxes or anything like that taken out of your income, but you write off all of your income on your tax returns, right? You're going to write off meals, you're going to write off expenses, you're going to write off mileage, you're going to write off advertising. Unfortunately, when you're looking at conventional or FHA, they can only look at your tax returns for income. And it's after all of your write-offs have already been subtracted from your gross income. Well, now you have a problem because you don't claim near as much money as you really made. With the 1099 only product, what you can do is get your 1099s for the last 2 years. You've got to be self-employed for 2 years on 1099. Then you can get a letter from your CPA. And what we're looking for on that CPA letter is what's called an expense ratio. So if your CPA writes a letter that says, hey, look, this client's expenses total 25%, then the lender will add up all of your 1099s over the last 2 years, average them, and then take 75%, because remember, you've got a 25% expense ratio, and they'll take 75% of your total, and that's your income. It's that simple. No tax returns required in any way, form, or fashion. So we can use just your 1099s to get you qualified. This program does require a higher down payment, so it starts at a minimum of 10% down. So remember, as you're providing less documentation to qualify for a mortgage loan, your down payments and credit scores tend to go up because it's a higher risk loan for the lender. But it gets easier and easier to get a mortgage loan with better credit scores and more money in the bank. So again, that 1099 only product is very, very straightforward, not difficult at all to qualify for. And again, it's a 2-year history of self-employed with 1099s. Cool deal. Now let's say you don't have that, right? We've gone through conventional, we've gone through FHA now, we've done the 1099. We don't have any of those things. Now what? How about asset depletion? So here's the deal on asset depletion. Let's say you got $5 million in the bank. Now, I don't personally know anybody with $5 million in the bank, but let's just do it for argument's sake, okay? You've got a bunch of money in the bank, but you have no income whatsoever. On this program, you do not have to have income at all. So what they do is they take your asset, $5 million or $1 million, and I'm going to use $1 million right now because it's a little easier to calculate. They're going to take that asset and divide it over a 3-year period of time, okay? So $1 million divided over 3 years is $333,000 a year. So that would be your effective income to qualify for that product. They just divide the asset over a 3-year period of time. And so if you're paying yourself a monthly payment out of your asset over 3 years, that's your new income to qualify. And so tax returns are not required. W-2s are not required. So again, you've got to have your down payment. You've got to have good credit. All those things are required on this product, but it's very simple to qualify for. No complexity whatsoever. You've got the assets, you've got the down payment, you got the credit score, those 3 items, you're going to qualify for that product. Okay, now let's just assume you don't have $5 million or $1 million in the bank, but you still want to find a great program and you're like, you know what? Okay, I can't qualify for FHA, can't do conventional, can't do 1099 only product, and I don't have asset depletion, but I've got great credit and I got money for a down payment. The easiest loan product out there, period, is called a no-ratio loan. So a no-ratio loan does not care about your income at all, right? At all. We don't even list income on your application. You can be self-employed or W-2'd, makes no difference because, again, we don't talk about your income on the application. The key is credit score and down payment. You've got to have great credit, right? Above a 700 score generally. I've seen some at a 680 score. And then you've got quite a bit of money down, 25 to 30% down, depending on your credit scores. And that's it. So the only thing that you provide proof of is the asset itself for your down payment. Now let's just say, for example, you don't have 25% down or 30% down in the bank. This program allows gift funds to be used for the entirety of it. So mom, dad, brother, sister, aunt, uncle want to gift you that 25 or 30% down. It works. No problem at all. You can get gift funds for that down payment. So, I mean, it does not get any easier than that, right? Gift for down payment, got to have excellent credit. It doesn't work for low credit scores, and no income verified whatsoever. Straightforward as it can be. So let's go over these one more time to make sure you've got them, because I want to go over them real quick. Conventional, okay, straightforward. The next one again is FHA. We're getting more and more flexible. The next one is 1099 only. That one's super flexible. It's a great product. Asset depletion, no job. And then the last one's no ratio, guys. Think about that for just a second. Imagine being a school teacher in a market where you couldn't afford a home normally. And I've done a loan like this recently where she had other income that she couldn't document on her tax return. She's like, Steve, I want to buy a $500,000 house. I can qualify for it. And we could see that, but there wasn't any program that allowed for it except the no ratio loan. And she was great with that. So we did the no ratio product, didn't have to prove income, and she's living happily in her house. So it allows you to qualify for a lot of different mortgages that you didn't qualify for before, and allows you to use alternative documentation to get that mortgage financing taken care of. So just remember, you don't have to have tax returns and W-2s and pay stubs on every loan product out there. Anyway, hope that helps you guys. That's, in my opinion, those are the top 5 easiest ways to get mortgages taken care of for you. Hey, do me a favor, click the like and subscribe button. It's over. It's in that corner, guys, in that corner. Hit that subscribe button. Check out the details below. I've attached some additional videos in my information below this video. And check out my page. I do new videos every Tuesday and Thursday, and we talk about all kinds of great mortgage products out there. Well, thanks again for watching my video. Hope you guys have a great night. We'll talk to you soon.